Hey folks, welcome back to the channel. This is Jason, and today I'm going to take a look at Tesla's Q3 2023 earnings. And there's already been a lot of news out there about the call last night, and there's a lot of criticism about Tesla and Elon Musk. Some of that is justified, but let's be honest, a lot of it's going to be unjustified because he is just a magnet for criticism at this point, especially since he bought Twitter. But let's objectively take a look here at Tesla results, talk about what the future looks like for Tesla, what some of their challenges are like going forward. And if you like this kind of content, please don't forget to like and subscribe to my channel. And I do have a Patreon. If you want to check out that link in the description below, I would appreciate that. Okay, so this is the Q3 2023 update, and we're going to take a look at some of the highlights here. And usually I don't pay too much attention to highlights because I like to get into the data. Tesla does always provide a lot of graphs. I do like graphs, and those tell us a lot about trends. And I will start off right now by saying trends don't look great. And Elon Musk was right about one big thing in his talk last night with shareholders, and we're going to get to that here in just a moment. But let's take a look at this. Profitability is they have a 7.6% operating margin in Q3. Their main objective remained unchanged in Q3 2023, reducing cost per vehicle, free cash flow generation while maximizing delivery volumes and continued investment in AI and other growth projects. The bottom line is, though, is that operating margin is down in Q3 2023 and has been moving in a downward direction for a few quarters now. So $1.8 billion in GAAP operating income in Q3. $1.9 billion in GAAP net income in Q3, and $2.3 billion in non-GAAP income in Q3. Basically, all of those numbers are down as well. Good reasons for that, though: increased investment in factories, unanticipated costs for Tesla's Cybertruck. We're going to talk about some challenges with Cybertruck on a design basis too in this, and this is just my thoughts and some consultations that I've done with some design engineers on some of the challenges that Cybertruck is going to have. Even though I thought it was I still think it's a great idea. I think that some of the challenges associated with Cybertruck are going to be very difficult to overcome. So operating cash flow was at $3.3 billion in Q3. That number is down. Free cash flow of $0.8 billion in Q3. That number is also down, and a $3 billion increase in our cash and investments quarter over quarter to $26.1 billion. That is great, actually. So operations, 4.0 gigawatt hours of energy storage deployed in Q3. Okay, so here's what's going on with energy storage. That is the one real bright spot in this report. And I have been watching Tesla Energy now for a few years, firmly believing that at some point, Tesla's energy storage business may be just as large as their automotive production business. At some point far in the future, I'm talking 10, 15 years from now. So we can see here that total operating revenues year over year are up 5%. But that doesn't really tell the whole story here. Since Q4 of 2022, operating revenues have been relatively flat. And really since Q3 of 2022, we're looking at this sort of anomalous down point here in Q3 of 2022. And since then, revenues really haven't changed all that much. So total revenues here, gross profit, we're looking at total revenues up about 9%. Gross profit is down 22%, and that is all on margin pressures. Total GAAP gross margin, it's down by 791 basis points. So operating expenses increased by about 43% year over year, and that has everything to do with Cybertruck and everything to do with manufacturing difficulties. They're having trouble scaling production, and I'm going to predict right now that trouble scaling production isn't going to stop. It doesn't have anything to do with sort of the regular problems that they had with production hell in 2019. It has to do with the design of the Cybertruck itself and the fact that with the tight tolerances and flat panels and straight seams of Cybertruck, manufacturing has to be really, really good. And assembly has to be really, really good in order for it not to look very wonky. And what I mean by that is, so I'm an experienced boat builder. I built a couple of small boats and one larger boat. And I can tell you that hiding mistakes on curved surfaces is a lot easier than hiding mistakes with flat panels and curved lines and seams. And this is one of the things that they're finding out right now, that the tolerances between panels has to be extremely tight. Tesla has never been known for its quality, fit, and finish. It's always been known for its software. It's always been known for its unique drive system. And it's also never had competition in this space either. They're going up against basically the Ford F-150, which is the best-selling vehicle in history, 40 years running, essentially. They're doing it with a unique design that is going to appeal to a lot of people, but it's not going to appeal to a lot of people as well. But they're doing it in a way that's going to guarantee that they have manufacturing challenges. And what I mean is the very thing that is supposed to save them money, which is the flat panel design, is also going to create enormous finishing challenges when it comes to final assembly. So those have yet to really be worked out from what I understand. And I do have people that are working. I do know people that are actually working in the Cybertruck factory, and that's kind of one of the main things that's holding production, or at least scaled production, back at this point. They can produce a Cybertruck. It's just not up to the standards right now that they want to deliver. So net income attributable to common stockholders, GAAP is down 44%. Non-GAAP is down 37%. This is not good. All related to the decrease in average per vehicle cost, or average per vehicle price, and margin pressures. So the margin pressures aren't going to end anytime soon. Elon Musk is entirely correct when he says that a lot of this has to do with interest rates, and that people are most focused on what their monthly payment is going to be when they go out to purchase a vehicle, and how that compares to Tesla's competitors, and how that compares to internal combustion engine vehicles out there as well. And if he can't win at that level, he's at the point now where everyone who's willing to spend extra money to adopt this new technology, that it's proven at this point, but some people think that it's unproven. But everyone who's willing to spend extra money to do that is essentially already bought into an electric vehicle. So now you really have to compete on providing a vehicle that's a great product at a price that beats out other products that you're more familiar with. So that's kind of the big challenge that they're facing right now. And Musk has always made the promise that when they have cost savings, they're going to pass those on to the consumer. And he's made good on his word on that. The difference here is that we've had a significant increase in costs for many of the raw materials needed, and labor, of course, but many of the raw materials needed to produce electric vehicles. So apparently right now, existing factories in California and a few other places are operating much more efficiently than the new factories in Texas or Germany are. So this is a big concern. Margin's a big concern, and that's not one that's going away anytime soon, because a lot of it has to do with the cost of capital right now, not just for Tesla, but also for consumers who are going out there to buy Tesla vehicles. So when we're looking at deliveries here with Model S and X production, those are down by 31%. Model Y production is up 20%. That is definitely a bright spot here. Model 3 deliveries also up 29% year over year. Those are two bright spots. Model S and Model X, let's remember, these were never one of their largest products. These are more expensive vehicles on the higher end, higher margin, of course, but it's really the Model 3 and Model Y production where you are looking to break into the mass market and really become a large company like a GM or like a Ford, or at this point, possibly like a BYD. Gigafactory Texas, they begun pilot production of the Cybertruck, which means on track for initial deliveries this year. We are expecting the Model Y production rate in Texas to grow very gradually from its current levels as we ramp up additional supply chain needs in a cost-effective manner. That goes back to, like I said, parts and raw materials becoming more expensive over time. Production of our higher density 4680 cells is progressing as planned. That I don't necessarily believe. I do not believe that they have solved the problem of the dry anode production at scale. I think they can do it in limited amounts. I don't think they can really do it at scale. I'm sorry, for cathode production, and they're building capacity for lithium refining here in the United States. Everyone's building lithium refining capacity in the United States at this time. China's Shanghai factory, they had some scheduled downtime in Q3. They used that downtime to install some factory upgrades that are actually going to lower costs of production, and Giga Shanghai remains their main export hub. So in terms of the Berlin factory, that Model Y remains the best-selling vehicle of any kind in Europe year to date, based on the latest available data as of August, similar to Texas. I will say that I may not be surprised if I see a decline in popularity of the Model Y in Europe, and that may be really due to Elon Musk's involvement in the Ukraine conflict. So I wouldn't be surprised if we see some sort of decline in that. Artificial intelligence software and hardware. I have to admit that I'm actually getting rather impatient when it comes to the delivery of true self-driving. And I'm really waiting on some solid updates for that. So one of the biggest news pieces that came out in my mind a few years ago was the Tesla rentals through Hertz. Apparently that is doing really, really well. And that is definitely a bright spot as well for Tesla. Battery and powertrain manufacturing, despite macroeconomic headwinds, and this is interest rates and raw material costs, the planned factory shutdowns in Q3, average vehicle cost declining to around $37,500. They continue to work to reduce the cost further. For very heavy vehicles, a high voltage powertrain architecture brings notable cost savings, which is why Cybertruck will adopt an 800-volt architecture. Somebody out there put a great video out on 800-volt architecture. I think that was Sandy Monroe. I suggest that you take a look at that. Energy storage deployments, this is the biggest bright spot, increased by 90% year over year in Q3 with 4 gigawatt hours, a highest quarterly deployment ever. Continued growth in deployments is driven by the ongoing ramp up of our mega factory in Lathrop, California, towards full capacity of 40 gigawatt hours with the phase 2 expansion. Production rate improved further sequentially in Q3. I like graphs, and this bar graph is pretty awesome. And energy deployments are definitely up over the last year or so. So let's take a look at, and this is a great photo of Cybertrucks being delivered on with a Tesla Semi. I think that's a great photo. So let's take a look though at what I'm very, very concerned with. I'm actually not all that concerned with the fact that deliveries were down. There was some planned maintenance done at the factory in China, as well as there's always some variation in deliveries as well. This is what I'm concerned with: the decline in operating cash flow, the decline in free cash flow, and the decline in net income. And those are the three things that I'm most concerned with. And honestly, that's not really going to change until we see a change in interest rate, in the interest rate environment. So key metrics here: operating cash flow, free cash flow. Like I said, these are in decline over the last 4 or 5 quarters. Net income is also in a downward trend, which is concerning. So, and that, like I said, has mostly to do with margin impact and cutting costs. So year over year revenue growth, to me, this is probably the most concerning thing. The biggest attraction to Tesla is the fact that their margins are much better than the rest of the auto industry. At this point right now, we're seeing operating margins for the rest of the auto industry essentially flat since Q2 of 2021. And Tesla's operating margins have been declining since roughly Q3 of 2022 and Q4 of 2022 rather. And that has been a concern, but I think we understand the reasons behind that. My biggest concern is that there's not that much difference now between the auto industry as a whole and Tesla. Okay, so the auto industry as a whole, though, has very different cost metrics, of course, than Tesla does, because they also have the internal combustion engines, vehicles that they're selling, and those margins have been relatively stable for a very, very long time, and they are just now starting to ramp up their electric vehicle production. This is introducing a lot of competition for Tesla at this point, and I think that the margin effects for the rest of the auto industry are coming as well, and they're going to see a reduction in margin as labor issues get settled with new contracts, as investment in new factories really starts to be seen on balance sheets, and we're going to see a decline in margin for the rest of the auto industry as well. Bottom line is this is not good for calculating the actual fair market value of either the regular, normal, traditional auto industry or Tesla itself. And I'm going to state right now that whatever the price of Tesla is today after its decline, since the market opened, you're going to have opportunities to buy in at an even lower price over the next year or so. There's going to be tremendous pressure on Tesla's margins. Most of that driven by margin concerns and by higher costs for materials, which aren't going away. There was some blaming of the war of the two wars that are going on right now, without him being overly specific on vehicle sales. I looked at the two wars that are being conducted right now, and neither one of those were large markets for Tesla vehicles. Okay. So that's not really a concern. It's actually Europe that is concerning for me right now. The demand in Europe is actually really concerning for me right now, but that's something I'm going to keep an eye on. There's not enough data right now for there to actually be a trend, but trends right now are telling us that cost pressures are going to be a giant concern for the next year or so. It's going to continue for a few quarters after interest rates start to decline. I made this statement before on my channel, but I think that the Fed is done with raising interest rates. I think that Powell's speech kind of confirmed that today, but they're going to be very careful moving forward, and higher for longer in terms of interest rates really means higher for longer. And I don't think we're ever going to see 2% or 2.5% mortgage rates again in our lifetimes. If you're old enough to watch this, I don't think you're going to see that in our lifetimes again. Anyway, thank you very much for watching this short analysis today. There's actually a lot more that could be said in that. There's a lot more digging you could have done into the numbers. And I encourage you to go out there and watch what other people are seeing, other YouTube channels are saying on the analysis of earnings, because it definitely wasn't all rosy. And it definitely wasn't all bad. There's good and bad to see in all of that. Thank you very much, guys, and have a nice day.